Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value, of course, the value by the metrics, how the individual stocks are holding up, see if there are any deals, see if there are any really good deals in the market. Take a look at the watch list, see if I would buy those companies at these prices, and see if we have any dividends coming up and what we plan on doing with those dividend payments. So, jumping in for today, we are down quite a bit, down about $500. Portfolio value is $49,000. And for today, we're down about 1.07%. That 1 week mark is going to get pretty bloody with a $5,000 loss, a 10% drop. 1 month mark, we're down 7,200. So, I mean, last month we were up to almost $57,000. I think we even nearly hit 57, and now we're down to 49. So it's a huge market downturn. But we've lost $7,200, about 13% in the past month. 3 month mark, we're down 2,600, 5% loss. Year to date, we are only down $700, a 1.4% loss. Then that 1 year mark, we are actually up $5,700, a 13% gain. Look at that line though for the year. Dang. That's vicious. It's a huge drop. But all time, we are up $22,000 with an 85% return. Buying power sitting at around $30 a share. Or excuse me, buying power sitting about $30 in the portfolio. That will be added to the Altria dividend to buy some Apple shares. Realty income dividend aristocrat down a little bit today at $52.20. Still not quite low enough for a purchase, but honestly at this level I'd buy it. 5 shares, $261 of market income or market value. Average cost is $51.75. 0.5% of the portfolio is an O. Today we're down 40 cents. Total we're up $2 with a near 1% return and $1.34 coming in on April 15th. Guys, this is going to be one of the bigger positions. It might even overcome Google or Coca-Cola and eventually Berkshire. For a while, I want this stock to completely subsidize my income, but it will take a long time. So this is going to be a bigger position. I wouldn't mind it being around 10K again. But at the current time, there are better deals within the portfolio. Next up, we got Altria, sitting at 320 shares, $7,700 of market value. The market, of course, is fluctuating, so the total price will go up and down, but around 17K. $47 is our average cost. Around 36% of the portfolio is in Altria. Today we're down $20. Total we're up $2,600 with a 17% return and a dividend coming in at the very end of the month of $326. So as of right now, guys, that is nearly enough to buy me 2 shares of Apple at these current prices. So the more Apple goes down, the more shares I'm willing to buy with dividends, right? Plus, if I have any extra cash, I'll throw it in there too. Then another dividend king in Coca-Cola, 15 shares, $1,000 of market value. Average cost is $60.54. 2% of the portfolio is in Coca-Cola. Today we're down $4.60. Total we're up $113 with a 12% return. So guys, this has fallen, but it hasn't fallen nearly as bad. I think it's because they do most of their import-export from Mexico. I think is one of the biggest country that drinks the most Coca-Cola. So overall, I'm not surprised to see them less affected by tariffs, but I would not be surprised if they drop a little bit more. But I don't think that. I think Realty Income, Altria, and Coca-Cola are all less likely to drop due to tariffs versus companies like Apple is going to be the big one. Visa is definitely going to drop a bit, and then I wouldn't be surprised if Google's still in the red as well. Next up, we've got Apple up to 180, still down pretty big overall, down over 25%. Year to date, it's down almost $30 or 30%, $70 a share, which is huge. So Apple's definitely a buy for me. My average cost is $218. I'm down almost $500, 17% loss here on Apple. So if I did my math right, I should be right about 2 shares of Apple, around $180 a share. So it is recovering though. I mean, it's been back and forth, but like for the past, of course, 3 months, it's down pretty big. It was sitting at 222 for a little while, about a month, around that 220, 230 range, and then it just dropped like a rock. So, I mean, it was at, like you guys can see, just a week ago, April 2nd, it was up to 220, and now it's all the way down to 180. So it's lost like $40 per share in 4 days. Because keep in mind, that includes the weekend where the market was closed. So really, this has been since Friday, um, the weekend, and now it's been Monday, Tuesday, Wednesday. So in like 4 days of actual, or 3 or 4 days of actual the market being open, over the weekend, it's lost $40 in like 4 days. That's insane. So, and I think there's going to be more red. Like I see it recovering a little bit, but I'm hoping it stays down below around this 180 mark because I want to be able to guarantee myself 2 shares with just dividends. So, and it does help when the prices go down because then I can buy more with that dividend payment. And my goal was 20 shares this year, and I think I'll be able to hit that by the middle of the year if I keep being aggressive about it, especially if the price drops. Like, if you think about it, originally if it was 220 and I was buying, 2-3 shares, or sorry, a share a month. This I'm guaranteed a share just with dividends. So like if I add any extra cash, I could get 2 or 3 shares instead of just one. So my goal was one a month. I could buy 2 with just dividends. So if I have extra cash, I could maybe even buy 3 if I budget it right. So I'm excited to buy more Apple at these levels. And then, of course, we got Abbvie down pretty big at 168.36, down another 4%. This one fell off a cliff, too, but I'm not worried about it. I'm waiting until it hits $100 a share to buy it, so it still has pretty far to fall. But the overall returns have gone down. No more triple-digit returns for Abbvie. 95 shares, around $16,000 of market value. Average cost is $95 a share. 32% of the portfolios in Abbvie. Today, we're down $600. Total, we're up nearly $7,000 with a 77% return. So I've still doubled my money on this, but it is not as high as it was before. Next up, we got Visa, which has recovered a little bit, right around $310 a share. Still down pretty big, over $1,200, almost 13 on this. 35 shares, 11,000 of market value, give or take. Average cost is around $350. 22% of the portfolios in Visa. Today we're up $86. Total we're down like $1,300 with a 10% loss. So guys, this is still another great buy. I would be a little bit more leaning towards Apple, but Visa is still a great value here. And then Google at 150, 148, 150, 7 shares, $1,000 of market value. Average cost is $187, so $40 a share. So about the same amount down on all three. I think when I did the math before, Apple's fallen a little bit more, so I think Apple's actually the best buy right now. But before, it was Visa. But 2% of the portfolios in Google, up $10 today, 1%. Total down 200, down 21% here. So guys, Google was falling before the tariff issues, so I'm not surprised to see it falling a little bit more. But this is one of those that I think it had actual economic business issues and headlines before the tariffs, so this is a little bit different than everything else. I think this is a little bit more baked into the stock being down, so I think Google's going to be down longer than everything else. I could be wrong. But I think Apple's going to be the most affected by the tariffs. I think it's going to be the biggest dip and the harshest swings and the most volatility. So overall, I think Apple's probably going to remain the longer buy. Visa, I think, is going to recover first, and then Google's going to be in between those two. So as of right now, I'm going to be buying more Apple. And then, of course, with the watch list, Costco at $9.15. I mean, I think it was up to $1,100 like a couple months ago. It was pretty high. Yeah. Like a month ago, it was all the way up to 1,000, right? It was near $1,000. So I wouldn't be mad buying it around 900. And then, of course, Berkshire, my thing I said below 500. If I could get it around 450, I'd buy it, but 500 is fine for me just to initiate a position. Doesn't need to be the lowest price. So I definitely buy it here. With that being said, guys, thank you so much for watching. Remember to hit the like button on this video, hit subscribe on the channel, and guys, remember, market fluctuations are an opportunity. I've lost $7,000 in a week, right? If you look at it, or $7,000 in a month, $5,000 in a week. I'm not freaking out. I'm not selling out of anything. I'm buying more. I'm buying more. Keep a long-term mindset. This could be a great opportunity to buy some of the companies you've been waiting to become on a sale. Just because it's not a 2% dip and it's a 15% dip does not mean that it's the end of the world. It just means it's a better opportunity. So thank you guys so much for watching. I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.